Hello, friends. Have you ever wondered, can an ordinary person who knows nothing about trading, who doesn't even recognize a chart, make millions of dollars in a few years? Seems impossible, right? But the reality is, once in history, such a miracle happened. And it wasn't by luck or magic, but by strictly following rules. The year was 1983. In the American trading world, two giants were locked in a heated debate. On one side, Richard Dennis, whom people called the Prince of the Pits because he had turned $200 into $200 million from trading. On the other side, William Eckhardt, a mathematical wizard who believed that trading was only in the blood of a few people. But Dennis said, "I will prove that great traders can be made, not born." Eckhardt laughed and said, "Impossible." And this is where the biggest experiment in trading history began, the turtle experiment. Richard Dennis threw a tough challenge to the world. He placed a small advertisement in a newspaper. "No experience necessary. Come and I will teach you to become a millionaire." People thought it was a joke, but hundreds of people appeared at his door. Interviews were held, tests were conducted, and only 23 ordinary people were selected. No trading education, no background. Some people were just ordinary folks looking for a job. Dennis said, "I will turn these people into traders in 2 weeks, and then they will shake the world." And so it happened. Just 2 weeks of training, just a few rules, and these 23 ordinary people made over $100 million in 4 or 5 years. These people became known worldwide by the same name, the Turtles. And it was proven that rules win, not talent. Discipline wins, not brilliance. Michael Covel's book, The Complete TurtleTrader, unravels this true story of how even an ordinary person, if they can control their emotions, follow a rule-based system, and ride the trend without any ego, can also make millions of dollars one day. This book says that inside every person, a trader is hidden. They just need to be awakened. Friends, today we are going to begin the real journey of this book. One by one, we will uncover the lessons of the turtle system that turned ordinary people into Wall Street warriors. And perhaps one of these lessons might change your life too. So stay tuned, because who knows, the strategy, the clarity, the discipline you've been searching for years, it might all come into your hands right here. And now, let's begin the first chapter, the art of riding the trend that made the turtles part of history.
Friends, the first lesson of the turtle experiment was what is the first rule of the trading world. Trend is the truth. But Richard Dennis didn't just teach this, he infused it into people's blood. What Dennis first taught the turtles was this: don't predict the market, just go with it. When the wave rises, ride it. When the wave stops, get off. This alone is enough to become a millionaire. This line sounds simple, but in reality, it's as difficult as a mountain. Because the human mind always wants to know, what will the next candle be like? What will be the next move? Is this breakout real or fake? Dennis said, these are all foolish questions. The question should be, is the trend going? If yes, just ride it. If not, then sit quietly. That is, the first lesson was, stop fighting the wave. Go with the wave. Now, imagine, brothers, the turtles practiced trend following for the first time. Whenever the price rose above a certain level, they would enter without question. Some days, the market would rise rapidly. Then their mind would say, stop, a correction will come. But their rule said, let it run, and they would let it run. Sometimes the market would suddenly fall. Then fear would strike their minds. Don't sell, it will go up again. Be patient. But their rule said, cut the loss, and they would exit immediately. That is, they didn't listen to their minds, they listened to the trend. And this was the real secret of their success. Because the reality is, the market is never wrong. We are wrong when we ignore the trend. The turtles learned from the start. If the market moves, you will earn. If you move, you will sink. The most beautiful aspect of this lesson was this: The turtles had no magic strategy, no secret indicator, no rocket science. They only had two simple tasks. If a trend forms, enter. If a trend breaks, exit. And these two tasks made ordinary people extraordinary. Because while the whole world tried to guess, the turtles taught the world a new truth. Don't guess, follow. Trend following is not just a strategy, it's a mental discipline. Because the biggest enemy of trend following is not the market, it's your own mind. The trend is going up, profits are increasing, but the mind will say, dude, take it out, book the profit, that's enough. The trend is going down, losses are increasing, but the mind will say, hey, hold on, it will go up again, be patient. That is, the mind will always try to make you do the opposite, when the trend means to stay in the flow. The turtles learn this art, to quiet the inner voice and listen only to the price. Richard Dennis used to say, trend following is not about predicting, it is about surrender, meaning surrendering your ego, your fear, your expectations. And when people surrender, that's when they really start to win. Because the winner is not the one who predicts the trend, the winner is the one who believes the trend. Friends, Lesson 1 teaches us that to win in trading, character is more important than strategy. Trend following builds character, patience, discipline, surrender, and clarity. This lesson seems small, but it's what made the turtles most different. They considered the trend the path and themselves the passenger. And this mindset guides millions of traders even today. Don't read the market, listen to it.
But brother, following the trend is easy, but catching the trend in time and exiting in time, that's the real art. How did the turtles learn this? What secret rules told them when a trend was starting and when it was ending? And what was that level where entering would give them millions of dollars in profit, and what was the signal where delaying the exit could destroy them? This secret is hidden in the second lesson. And if the first lesson shook your thinking, then the second lesson will change your entire system. Because there, the turtle's real weapon is revealed, the breakout rule. Friends, Richard Dennis first taught the turtles that the trend is king. But where does the trend really begin? Where is the trend born? And when should we enter? Dennis answered this in one line. When the market breaks out of its cage, that's when you enter. Because a breakout is the real beginning. And from here was born the most important rule of the entire turtle system, the breakout rule. Richard Dennis told the turtles, the market makes noise every day, but a breakout is a scream that cannot be ignored. A breakout means the price will surpass a level where it has been stuck for a long time, and suddenly the door to freedom will open. Dennis used to say that where the crowd fears to enter, that's where the real trend is born. That is, a breakout is an invitation, a door from which millions of possibilities emerge. Now imagine the turtles are practicing the breakout rules for the first time. The candle goes up, the mind says it's fake. The rule says enter, and they entered. The candle starts to fall. The mind says, see, I told you it was fake. The rule says, don't move the stop loss, sit quietly. And suddenly, after a few hours, the price soared and the trend began. That single entry taught the turtles. The mind can be wrong, the breakout is not. For the turtles, a breakout meant new opportunities, new directions, new trends. And if they missed that opportunity, the entire trend could be missed. Dennis said, if you see a breakout and you don't enter, then you are not a trader, you are a spectator. Many times breakouts were slow. Many times the market traded sideways. Many times small candles formed. But the rule said, entry means entry. You will not guess, you will follow. This was turtle discipline. And brother, entering on a breakout is not easy because fear, uncertainty, and doubt are greatest there. When the price breaks an old level, all the traders next to it get scared. Fake, trap, the market will return. But turtle traders would only think one line. If the market is breaking the level, then something big is about to happen. And many times from there, the trend was born. The trend that made the turtles millionaires. Now imagine Two types of voices come during a breakout. The first is from the mind. Stop. Don't do it. There's a risk. The second is from the rule. Enter. This is where life changes. The real turtle was the one who silenced the whispers of their mind and followed the voice of the rule. Because emotion is cowardly and a rule is a warrior. Michael Covel writes, "The turtles never predicted the future. They only reacted to powerful breakouts." That is, their credit was not in prophecy, their strength was in reaction. A breakout formed, entry. A breakout broke, exit. Simple. These two actions were so powerful that they shook the entire trading world. Breakouts taught the turtles this: don't fight the market, just walk in when its door opens. And the most beautiful thing was, breakouts rarely lie. Yes, sometimes they are fake too, but their stop loss remains small before the trend begins. And when a real breakout comes, it brings 10 times the profit of the loss. This is why the turtles considered breakouts their biggest weapon. But brother, now a question arises. After entering on a breakout, when do we exit? When to leave the trend? When to protect profits? When to end the ride? And when to extend the ride further? Because a breakout only teaches entry, but the science of exit is completely different. And exit is where 90% of traders make mistakes. This secret is hidden in the third lesson: the art of riding the trend, meaning how long to ride the trend and when to get off. Friends, entry is easy. Exit is the real test. And the turtles knew this well. Richard Dennis told them, entry puts you in the trade. Exit makes you rich. That's why the turtles were taught to feel the pulse of a trend before catching it. Dennis used to say, a trend is like a river. It'll keep you afloat as long as you let it. But most traders drown halfway because they get scared, get excited, or take profits too early. That is, the biggest enemy of trend following is impatience. Now imagine a turtle trader has entered on a breakout. The price is going up. Profits are slowly increasing. Two voices are running inside him. The first voice, take it out. This much profit is enough. The second voice, no, ride it. A big trend brings big profits. The turtle was taught this art. Kill the first voice, because that voice is of emotion. That voice comes from fear, comes from insecurity, comes from scarcity. Oh, what if the profit is lost? But the second voice is of the rule. It says, ride until the trend bends. That is, ride the trend until the trend itself stops. And the turtles did so. Michael Covel writes, the turtles never exited too early. They only exited when the trend truly died. This was the secret that separated them from the rest of the world. All other people would leave the trend too early in the pursuit of taking profits. The turtles followed the trend, not the profit. This was the big difference, because every trend had two types of movements: small pullbacks and actual reversals. In small pullbacks, ordinary traders would get scared. It's going to fall right here, get out. But the turtle rule said small drops are the breath of the trend. Until the entire pattern breaks, stay. That is, leaving the trend midway was not in their dictionary.
The magic of trend following is that profits explode only when you let the trend run for a long time. Dennis always used to say, there will be 10 trades in a year, but your earnings will come from only 1 or 2 big trends. Meaning, in trend following, the millionaire is the one who has patience, lets go of impatience, and lets profits grow. Because a trend doesn't grow slowly, it grows suddenly. First it goes up a little, then sideways, then one day, boom, the trend explodes, and that's where millions are made. The turtles saw that a great trader is not one who enters perfectly. A great trader is one who stays until the trend is fully matured. Now, how did the turtles exit? Very simple. Just as they entered on a breakout, they exited on a breakdown. They followed the trend, and when the trend broke, they exited without ego. No, I'll hold on longer. No, I'll wait a bit. No, maybe it will come back. Only one rule. If the trend breaks, the story ends. This is why the turtles caught long trends and took small losses. Their mental programming was this: Small losses are not a problem. Missing the trend is the biggest loss, and that mindset brought them victory. Riding the trend is not just a strategy, it's a personality. In it, your mind sees everything: pullbacks, retracements, volatility, fake moves, and still remains calm. Because a turtle trader knows the trend is flowing, I just have to float. This mental stamina separates them from the crowd. Trend following is actually the greatest meditation for the mind. A lot of patience, a lot of surrender, a lot of discipline, and when you learn this, the market becomes your team. But brother, riding the trend is not easy. The biggest challenge is stop loss and position size. If the stop loss is set incorrectly, you won't be able to stay in the trend. If the size is taken incorrectly, fear will grip you in the middle of the trend. Meaning, trend riding alone is not an art, it also had two safety covers: risk control and position management. And these two were such powerful secrets that this was the real DNA of the turtle system. Now, the biggest question: how did the turtles avoid losses? Why were their losses very small and profits very large? What mathematics and what psychology did they use that stabilized their earnings? All these treasures of secrets are hidden in the fourth lesson, the risk rule: how small losses form the foundation of big profits. And brother, if the third lesson taught riding the trend, then the fourth lesson will tell how to stay in the trend. Friends, riding the trend is important. Catching breakouts is important. But reaching the trend is even more important. Who reaches the trend? Not the one who wants to win big on every trade. Rather, the one who has learned to lose small on every trade. This was the real mantra of the turtle system: lose small, win big. A simple line, but this line is the key to millions of dollars. Richard Dennis told the turtles, "Don't fight the market. Don't try to win the market. Just make sure that one wrong trade doesn't destroy you." Now, listen to a truth. The turtles were the world's most disciplined stop-loss users. Their stop-loss was not a strategy, it was a life-saving cover. Covel writes, "The turtles survived because they respected losses," meaning consider losses not an enemy, but a natural phenomenon. The turtles were taught, with every entry, first ask, "If I am wrong, how much can I lose?" The game of becoming big in the market begins with this question. Now imagine, a turtle trader enters on a breakout. The trend is trying to go up. But after some time, the price falls a little. The mind says, hold on, it will go up again. But the turtle's mind was encoded with rules. First, to keep losses small from pain. Second, rule bigger from emotion. Third, if wrong, exit quickly, and he would exit. Zero ego, zero drama, just exit. Because in the turtle system, emotion was expendable. Risk was hidden. Dennis once said, "The goal is not to avoid losses. The goal is to avoid big losses." And brother, this is what 90% of traders don't understand. They think if there's a loss, I made a mistake. But the turtles thought, a loss means the rule is working. There was no trend, we saved ourselves. Losses were not a punishment for them. They were the fee to enter the trend. And one who fears to pay the entry fee is not worthy of entering the temple of the trend. Now comes the game of position size. The turtles would never risk their life on a single trade. Because if one trade can kill you, then you are not a trader, you're a gambler. Their thinking was, winning trades will make our account bigger, but losing trades will not break our confidence. So they traded with a fixed, controlled size. Why? Because if the position is small, the mind will remain calm. If the mind is calm, decisions will be clear. If decisions are clear, risk control will be automatic.
This is why the turtle's mind remained steady even after every loss. They knew that big losses for them were not difficult, they were impossible. Now let's talk about the thing that always kept turtle traders alive, the psychological shield. The risk rule was not just mathematics, it was a mental shield that protected them from their own emotions. Because big losses break the brain, they reduce confidence, destroy discipline, and start revenge trading. The turtles never fell into this trap because they had no such thing as big losses. In their world, losses were of two types, small and very small, and profits were long and very long. The risk rule gave the turtles another superpower, freedom of mind. When people know that even if the worst happens, they are still in control, then they look at the market fearlessly.
Every trade of the turtles was fearless because they knew our risk is defined. Our consciousness is clear. Our focus is on the trend. This risk control brought them out of the prison of emotions. The deepest lesson of the risk rule is this: define the risk, the thought of the outcome will disappear. Every turtle's mind was clear. If profit comes, it will be because of the trend. If loss comes, it will be because of small losses. Only this clarity gave them the strength that 99% of traders in the world do not have. Because the world avoids risk. The turtles manage risk. This is the difference between losing and winning people. But brother, after the risk rule comes the lesson that taught the turtles to read the mind of the market. The lesson that tells you when to be aggressive, when to be calm, when to catch the market, and when to let the market carry you. Now begins the most mysterious, most powerful part of the turtle strategy. The fifth lesson, the psychology of a turtle. Victory over the mind, dominion over the market. This lesson will tell how the turtles destroyed fear, greed, excitement, and anger one by one, and created such a mental state where trading becomes meditation. Friends, Richard Dennis taught the turtles the language of charts. He taught them the power of trend following, gave them the shield of risk. But the biggest gift was mind control. Because every strategy in the world, every indicator, every breakout, all become useless if your mind works against you. The turtles understood that real trading doesn't happen on charts. It happens inside one's own brain. Market fluctuations are not as dangerous as mental fluctuations. Market waves can drown you, but emotional waves can destroy you. Michael Covel writes in this book that turtle traders were emotionally bulletproof, meaning even if they were shot, emotions would not come out. Why? Because they were taught control from the beginning. Dennis began their training with one line: don't trade with emotion. Emotion weakens you. Rules give strength. No matter how experienced a person is, no matter how intelligent, as soon as emotion takes control, the trader is finished. The turtles had infused this rule into their blood. Imagine, brother, the trend is going, profits are increasing, excitement is increasing. A voice from inside, take it out, this is enough. But the turtle mindset says, what does the rule say? If the rule says stay, then stay means stay. Even if the heart is burning or hands are trembling, because you are trading as a rule, not as a trader. Now imagine the market starts moving in the opposite direction. Losses increase, panic inside. Move the stop loss, the trend will return. But the turtle mindset says, losses must be small. There is no place for emotion. And they exit. Even if the whole body says, hold on, it will come back. This discipline, this mental fortitude makes them different from the crowd. Turtle psychology stood on three things: surrender, neutrality, and detachment. Surrender means the market is my master. I will not predict. I will not be arrogant. I will bow to the trend. Neutrality means it doesn't matter whether I am right or wrong. I will only follow the rules. Detachment means this is not my trade, this is the rules trade. When a trader becomes so detached that neither profit excites him nor loss disappoints him, then he becomes not a slave of the market, but the master of the market. Richard Dennis told the turtles a very profound thing. If you can conquer the mind, then the trend, chart, market, everything will be conquered by itself. So an ordinary trader gets agitated looking at the market. The turtle laughs looking at the market, because no matter what the market is like, his emotions remain stable. This psychology gives two completely different results with the same strategy in two different hands. The strategy can be found in books. The mindset is built only from penance. And turtle psychology is the most difficult penance in trading, where you have to defeat fear, control greed, silence ego, and make discipline your god. Only then can you enter the mind of that Zen trader where every candle becomes a story and every trend becomes meditation. But brother, after the turtle mindset comes another thing that is even more dangerous than psychology. That is turtle consistency.
The mindset shows you the right direction. Consistency gives you the strength to walk on that path. Because without consistency, mindset is a warrior without a sword. And consistency without mindset is a sword without a warrior. The next lesson will tell how the turtles turned discipline into a habit, how they made themselves machine-level consistent, and how the same daily routine made them financial legends. So get ready. The sixth lesson is the discipline ritual. Daily rules are the foundation of big wins. Come on, brother. Now comes the last lesson, the last, most sacred, most powerful, most transformative lesson of the turtle system. The lesson without which the trend doesn't work, breakouts don't work, the risk rule doesn't work, psychology doesn't work. Because this is the thing that turns an ordinary person into a legendary trader. Friends, when Richard Dennis prepared the turtles, he didn't just teach them trading rules. He gave them a way of life. Because trading doesn't work until it becomes your habit. Dennis used to say, discipline is the real holy scripture of trading. That is, discipline is bigger than strategy, bigger than mindset, bigger than skill. And this is why the turtles succeeded in shaking the world, because they considered discipline not an option, but a religion. From the moment their eyes opened in the morning until the end of the day, every moment was bound by rules. No excuses, no mood swings, no emotional shortcuts. Just the daily rituals. And these rituals were not just about trading. It was a mental penance. In the morning, they didn't look at charts. First, they looked at themselves. Is my mind calm? Do I have the ability to follow the rules today? Am I not a slave to the market today? Can I be a warrior of the rules? Only then would they open the chart. Their day was like this. The market opened, a trend was seen, entry to be taken according to the rule. Where is the stop loss? According to the rule. Position size? According to the rule. Profit seen? According to the rule. Loss seen? According to the rule. Meaning, it doesn't matter whether emotions are in a good mood or a bad mood today. Rule is God. Rule is supreme. Rule is the ultimate truth. This was the turtle discipline ritual. Michael Covel writes, the turtles were not great because of intelligence. They were great because they did the same right thing every day. Every day the same work, every day the same process, every day the same consistency. Whether the world changed or the market crashed, the turtles didn't change because discipline was their anchor. And the funny thing is, for them, discipline was not boring. Discipline was their freedom. Because they knew, if I follow the rules, the market will never harm my operations. Discipline rituals gave them three sacred powers. First power, clarity. Because when people follow the same rules every day, decisions become crystal clear. Second power, stability. Because no matter how much the market spun, their minds remained calm. Third power, fearlessness. Because they knew that rules were their protector, emotions were their enemy. These three powers combined made them a machine-like trader who remained steady every day. walked on the right path every day, surrendered himself to the rules every day. There is chaos in every trader's life. Sometimes fear, sometimes greed, sometimes doubt, sometimes anger, sometimes excitement. But the life of a turtle trader was like a calm river. Very steady, very stable, very predictable. And this consistency made them multimillionaires because the world trades emotionally. The turtles traded based on rituals. This last lesson teaches, discipline is not a habit. Discipline is an identity. Following rules is not a task. It defines who you are. Friends, now as we look back at this entire turtle journey, we understand a great truth. No one can win the market, but the one who conquers his own mind, he becomes rich. The trend showed them the way, breakouts gave entry, risk gave protection, mindset gave strength, and discipline crowned them. This is the essence of the turtle strategy. It's not a strategy. It's a mental revolution. If you adopt these 6 lessons in your life, you will not just be a trader, you will be a turtle. And a turtle means patience, discipline, clarity, fearlessness, and extraordinary stability. These qualities are still seen in every great trader today. So brother, if this audiobook has touched your soul, if you have learned something, if your thoughts have been stirred, then start your turtle journey now. Consider rules as God, discipline as religion, trend as the path, and yourself as a warrior. So friends, if this audiobook felt powerful to you, if you learned something new, if you got clarity in your trading today, then brother, please like it. Let me know in the comments which lesson touched your heart the most deeply, and share this audio with your friends who want to learn rule following in trading. And yes, don't forget to subscribe to the channel, because in the next audiobook, we are going to open another legendary trading system.